you guys to use. Most of you will be using this if you want to upgrade your swing trading and your high-powered day trading techniques. So for those who are interested in like nice swings, this is a good tool to use, like option flow. So let's go over the hierarchy of it. So smart money, hedge funds, institutional banks, proprietary trading firms, billionaires. They accumulate and distribute large quantities of stock. They determine the market sentiment. They buy at lows and sell at the highs. Institutions, high frequency trading algorithms. They follow smart money's large orders. They buy or sell aggressively depending on what smart money does. They are the ones who cause exponential volume increase and big directional price moves. Their orders are auto-tuned and their systems are capable of placing thousands of orders before you can place a single trade. They are in and out quickly. Investment groups and small funds. The average investment company that is somewhat informed on the overall market. They listen to suggestions made by the large institutions and follow market trends. They buy and sell in the middle and not at lows and highs. Small investors and retail traders. The average retail trader investors are very small fund. They often buy towards the end of uptrends and sell towards the end of downtrends. So you have uninformed investors, dumb money. This is, everyone else pretty much. And these are the people, like, I guess you can say, people who are misinformed. They really don't know how to trade. They have very little experience. They are based on emotions. They're impulsive. They always buy at highs and sell at lows. That's pretty much the noob trader. They're always buying at the high and selling at the low. He said, AKA me before AMU. Right. Market shares between market players, investment groups, small funds, retail, uninformed investors control roughly 15% of the market shares. Smart money, corporations, billionaires, institutions, all of that, they control the rest. So you don't really have pull in this market, It's mostly you're fighting against billionaires and trading algorithms and stuff like that. So option flow is pretty easy to understand, but it requires a belief that high volume leads to higher prices. Without this notion in mind, you will never be able to use it for a trading setup. Option flow analysis is tracking the option suite so that we can get an idea of what large players are thinking. These large players are usually institutional traders, market makers, proprietary traders, trading firms, financial firms, commercial banks. These option sweeps can range from anywhere between thousands of dollars to millions of dollars. So let's get into it. Flow Algo is the app you will be wanting to use. Flow Algo only trades option orders that are filled at the ask, above the ask, or closer to the ask. So basically, I think I already explained this, the bid and the asking prices. So remember, you always buy on the ask and sell at the bid. You guys remember that? So that is what they're saying. These will always be filled. So you don't have to worry about that part. So what is a sweep? What is a split? No, well, it's not an app. My fault. It's not an app. It's a website. It's only a web-based version. My fault. So it's not an app. So what is a sweep and what is a split? Orders marked as sweep are multi-exchange sweep to fill orders. Orders marked as split are single exchange sweep to fill orders. Intermarket sweeps are smart routed orders that sweep multiple exchanges simultaneously to fill large orders quickly. They print to the tape as multiple smaller orders, yet they execute just microseconds apart. So basically, a sweep is a multi-exchange. Let me go over my phone. Spotlight. So basically, a sweep is filled by multi-exchanges. A split is filled by a single exchange. That's how you kind of recognize it. So if we look in here, this is Foot Locker and this is Uber. So if we were to read this right here, it would mean Foot Locker on this date. So it was called on this date at this time with a strike of 31. It was a call option. It was at a spot of 29.47. Someone bought 875 shares at the price point of $70. Because remember, if it's 0.7, you multiply by 100. And it's a split order. So it's coming from a single exchange, and they spent 61K on it. Does everyone get what I just said? Or that was Chinese? Okay, that makes sense. And like I said, Uber, the same way. They bought it on this date, at this strike, at this particular price point, and they bought 2,055 shares at $29, and they spent 59K on that price. So that's what that is saying. That's how sweeps are read to you. So what does that tell you? That tell you that there's call flow, smart money going into Uber and Foot Locker. So what should that cause you to do? That should cause you as the trader to say, hey, so I had cotton mouth, had to switch some water, but that's it. That can make you as a trader say, hey, there's smart money going to this, and I need to look at this stock. So what is a block? Option block orders are large, privately negotiated orders. They're executed apart from public auction. So you don't really have to know the difference between block, sweeps, and all that. You just got to know that there's flow within a stock that are calls or puts. Yeah, you do need to know like what certain ones are when it comes to purple and gold, but blocks, splits, all of that, it's cool to know, but you're looking for a pattern of flow anyway, so it really doesn't matter in my opinion. Oh, but yeah, like a block is a privately negotiated order. So why are some highlighted purple? Option flow orders less than 35 days out. So to give you guys a cheat code, make a long story short, if you see a bunch of purple sweeps coming into a option trade, that should lead you as the person to be like, okay, there's lots of unusual flow here. So what does a purple sweep represent? A sense of urgency, because it's less than 35 days out. So that person has bought that contract and they expect it to move quickly. But usually the dates be kind of, the expiration dates be like close. Like they be close into, you know what I'm saying? So basically the expiration date will be like this, but it'll be like the 15th of the month, and they'll be coming in with expiration dates like this. So you'll be telling yourself, okay, they believe this move is going to happen very soon because they have close expiration dates and the strike price is pretty close. So that, you know what I mean? So that's what these represent, a sense of urgency, purple sweeps. So sometimes you'll see a bunch of sweeps come in at once, right? So if you look right here, a lot of sweeps came in at 10 o'clock. So from this point is when all the sweeps came in, right? So all the sweeps are, and then they really start piling up at this level right here is when the sweeps really start piling up. So it shows you what level they call that these people are buying. And as you can see, they're all buying at this 185 level right here. So you got to pay attention to that. They're all buying at this 185 level, and they're buying right here. They're all just crushing it right here. Everybody just coming in, buying sweeps right here at this point. So what are you telling yourself? From this hour, so we got like not even an hour, like a whole 20 minutes of people just buying at this price point. But you can see that everything correlates with each other, because what do we see here? The VWAP. So you see when it pulls back, everyone is buying at the VWAP. So that's why I tell you, you need to have this indicator on you at all times. And this can also be a pattern that I'm going to show you guys in the later classes, but this is also called an ABC pattern. So an ABCD pattern, which you'll be learning later on in the courses. And you'll be like, oh, okay, I remember what he said. I'm not going to spoil what it means, but you'll be learning this pattern later on in the course and the VWAP and everything. But all of this, you see how everything correlates with each other. You might see candlesticks right here, but someone else is looking at option flow. You see what I'm saying? And then you might see an ABCD pattern right here, but someone else sees a VWAP bounce. You see what I'm saying? Or they might see option flow in this area. So that's the beauty of the stock market. All of these players and all of these different factors are giving people these many theories to buy. So one person might be buying because of this, one person might be buying because of that, and one person might be buying because of that. Does everyone get what I'm trying to say though, right? So pretty much that's what I'm saying. So same here. What do we have here? Caller, same thing. We see a lot of sweeps coming in, a pattern of purple sweeps just piling up. So, and then it started happening as soon as the market opened. So you probably can't see that, these time frames, but all of this happened within the first, so let me just put it into perspective. Within 10 minutes of the market open and within 2 minutes of the market open. So let's do 3 minutes of it within the market opening. 3 minutes within the market open is right there at this point, right? All of that is within 3 minutes of the market opening. All of these sweeps from this point and down is within the first 3 minutes. This is Flow Algo, and no, it's not free. It's $150 a month. So right about here is when you see all of these call sweeps coming in. A lot of bull flow. And what is that showing? A lot of people that you don't know, these institutions, these smart money. So smart money, that's what we call this, is flowing in around this time. And look what happens. It goes as high as here. Well, really as high as here. Because they know something we don't. They probably know Caldera is going to boom because of this reason. So they threw in some money. You know what I'm saying? Like, that's how you got to look at it. This smart money knows something you don't. They know when the news is coming. Sometimes the flow will happen before the price even hits. Well, a lot of times, as you can see, they were calling it right here. A lot of times the flow leads the price action. That's why some people say follow the bull flow. Do you use this and trade based on flow algo? I have. I used to in the past, but the reason I don't do it is because it's kind of like a educated guess, because you have to, they can trick you sometimes. Sometimes there can be a lot of bull flow, but nothing happens. But what this is doing is giving you another indicator. If you see, because sometimes, I ain't gonna lie, do I use it? Yes. There are been times where I've done it and you guys didn't know it was from flow. I just called it. But I'll tell people like, oh, I'm getting in this because of bull flow. If you've been in my chat long enough, which I'm pretty sure a lot of you haven't been in my chat long enough for me to see me, that phase that I went through when I was buying a lot off flow and stuff like that. I don't do that no more. I just trade. But anyways, golden sweeps are good things to know, because what they do is they're showing you when people spend millions on something. So these two are going to be your bread and butter. That's why they're next to each other. So I ain't gonna lie, if I see a bunch of golden sweeps coming in on the stock, I'm gonna pay attention to it. Now I will say this: purple sweeps, I really, really pay attention to. In fact, I'm going to go look at it tonight and go see about it. I'm glad I seen this, because I stopped paying attention to flows. But I want to go see who got some unusual volume going on. Because I'm telling you, you can make a lot of money off purple sweep. I've seen it with my own two eyes. every single day somebody making thousands because they was like, I just followed the purple sweeps. And I'm like, whoa, let me try this. And it works for real. So like I said, is this good for option trading? No, this is option trading. Flow Algo is just a straight up option trading app. So like I said, you have a golden sweep. It was called here, and then it gapped up the next day. You know, that's where the golden sweep was called, gapped up the next day. So whoever this was, they bet $1 million. They probably made, who knows, you know what I'm saying, off that. I mean, what we even want to know. So what is Alpha AI? Alpha AI is a tool that's kind of like, you know, it used to be dope, but it got to the point where we make money without it. So it's like, but you can use it. And basically what it's doing is it's a bot that tracks those unusual flows. So you don't have to go and look for them sometimes. So it'll be times where it'll be an Alpha AI posted and you'll go and check, and lo and behold, it'll be a lot of purple sweeps and stuff like that. So that's pretty much what it is. Long means calls, short means puts. So here you see Alpha AI was signal long. It was signal long here. So if you would have got in on the 8, so you can also look at stuff like that. If the Alpha AI is telling you it's a lot of flow on something, and you would have got, if you would have got in on this pullback, you would have made a lot of money. So the Alpha AI does do a good job with signaling. I will say that. And then Alpha AI was signaled there. I remember a lot of people made money from it back in the day. In fact, the Alpha AI, people used to make so much money off it that they would run studies on it. People would literally only buy the Alpha AI at one point in time in our chat. Like it was like that. It was a craze. It was addicting to them because you got to think, look what type of stuff it's signaling. It'll signal it right here, and then the stock will pop. So to some people, like shit, that's free money. Every time I buy what they say, it's free money. But it got to the point where it went through a spell when the market is choppy. See, this is what happens. The Alpha AI works, but it works best when it's a trending market or something like that. So when the market trades choppy, it might cause some BS. Do I still use them? I used them for AMD the other day. I do remember that. I made like 1,000 using it. Just I think it was Monday. So 2 days ago, yeah, earlier this week. I used the Alpha AI play. It was AMD. Somebody remember? If you in my chat, it called AMD like real early, and then it hit. Oh snap! I forgot to pay the guy who does it. But anyways, oh yeah, Darian Staples said they made some off of it. So like I said, remember that Alpha AI was posted. Lo and behold, look how many Tesla purple sweeps you see. And you see how Tesla is now like a $400 stock, but these are like $1,000 a sweep. So Tesla is really supposed to be at like $2,000, but remember they had a stock split. Somebody said I've been in the chat and just not understanding it. So remember, you're looking for a pattern of flows. If it's a lot of purple sweeps and sweeps in general, the stock has bull flow. So if you ever see somebody say the word bull flow, they're talking about option sweeps. It's a lot of flow going into a stock. And if you ever see somebody with bear flow, they're talking about bearish. They believe the stock is bearish because all the smart money is bearish. Does everyone understand that? Where can you find the AI? It's on the website, flowalgo.com. All right, so I'm going to pass the torch off the mic. Hope you guys learned a lot.
Yeah, it's me doing it. Okay, thanks for
Oh,
starting.
my fault. Unraveler.
Thank you. Give me a second, guys. Just getting set up. Hope you guys can see my screen. Good evening. Welcome to day 9, AMU University. So today's topic is dark pool. I'm going to teach you how to read the dark pool and what the dark pool is. It's a very interesting topic, and I'm pretty sure that none of the courses available online covers flow algo or option flows or dark pool. So it's going to be something unique to AMU. Hope you guys learn a lot. Let's get started. So the table of contents for today's lesson, first I'm going to be giving you guys an introduction to dark pool, why we use dark pool, the different types of dark pool orders, what are signature prints, what is a bullish signature print, what is a bearish signature print, interpreting reversals in signature prints, equity blocks, which is has nothing to do with dark pool, but it's something that I promised I will cover in this class when I went over my scanners. And then lastly, I'll be teaching you how to use the key levels feature on Flow Algo. Okay, hope you guys are ready. Let's get started. Introduction to dark pool. Dark pool are private stock exchanges for trading securities. Orders placed in the dark pool are not readily accessible by the investing public like orders placed on traditional exchanges. What does that mean? So typically, when you place an order, if you use your Thinkorswim desktop application and you've seen the level 2, you've seen that there are different exchanges out there. There may be NASDAQ, maybe BATS, there may be Euronext, there's a lot of exchanges out there. So what these exchanges do is they facilitate the transaction, their market makers, and all the transactions that you do today in the stock market. So when you buy and sell something, all of those get recorded and they are available in times and sales. So whenever someone buys and sells a share, those transactions are recorded and are reported to the exchanges. Okay, so it's a mandatory requirement, and anything that you do, anyone that placing any order in the market, you will be able to see that in the tape. Okay, you will be able to see you'll be able to see the orders in the order book, and then you'll be able to see those orders come once the transaction is complete. You'll be able to see that in the tape. Now, dark pools are private stock exchanges for trading securities. So typically when you buy and sell in the stock market, those are recorded. You will be able to see, as a general public, you will be able to see those transactions. But dark pool, on the other hand, they are private stock exchanges, meaning any order you place in the dark pool is not going to be readily visible by the investing public, like an order placed on the traditional exchanges. The dark pool trading activity is reported with a delay. Sometimes after a few hours, but in most cases, they won't be reported until the very next day. So there's a reason for that. So most of the dark pools, they are located across the Atlantic. They are located somewhere in Europe. They are located somewhere in England. They may be located somewhere across the sea. They are in a different time zone. And like I said before, any transaction that's completed, like any buy and sell transaction of securities, it needs to be reported to the exchanges and to the SEC. Okay. Now the same kind of obligation, the dark pool also, whoever facilitates the dark pool exchanges, they also have a similar responsibility to report all these transactions. But since they are located in a different time zone, most of the times this trading activity won't be reported until the very next day. Okay, and that's why you as an investing public won't be able to look at the transactions in real time. Now, dark pools, there's a common statistics. Dark pools make up, according to more recent reports, an estimated 65% as of December 2018 of the stock market daily volume. So whatever daily volume you see, you're only seeing a fraction of the real transactions that's happening in everyday traditional public exchanges. Most of the big money moves, the large transaction, institutional transactions happen through the dark pool. Okay. Now think about that. You think that a lot of transaction happens in the through public exchanges, and you think that that's the stock market, but the real transaction, the real big money moves happen behind the scenes, and dark pool are private exchanges where such transactions happen. Now, if you've never heard of any of this is going to be a very interesting lesson, because we're going to be learning about dark pools and how to read them and how you can use them to know what the smart money is up to. Okay. As of February 2020, There are more than 50 dark pool exchanges registered with this SEC. There are three different types. So as of February 2020, earlier this year, we've had more than 50 dark pools registered with the SEC. There are three different types of dark pools in general, the classification of dark pools. Number one, broker-dealer owned dark pool. Number two, agency broker or exchange owned dark pool. And number three, electronic market makers dark pool. So these are the three different types of dark pool. And there are 50 of them registered with the SEC as of February 2020. So what is a broker-dealer owned dark pool? These are dark pools set up by large broker-dealers for their clients. Transaction prices may not be derived from the public exchanges, that is the NBBO, that's the National Best Bid and Offer, so there's price discovery. So let's review these 2 points. Number one, these are owned by broker-dealers. So if you have, there are a few examples here. Credit Suisse is Crossfinder, Goldman Sachs, Sigma X. So these are big banks and they have their own dark pool exchanges that they established for their own clients. Now the second point here says that transaction prices may not be derived from public exchanges. So public exchanges, so when you buy and sell a stock, there is a bid and there is an ask, and those bid and ask is determined by the current demand and supply for that stock. If the buyers are in control, there's going to be more demand and prices are going to move up. And the sellers are in control, then the stock's going to fall down. It's going to drop. And those prices are based on the public exchanges. That's the National Best Bid and Offer. Okay. So these exchanges, broker-dealer owned dark pool, the stocks that's traded in those exchanges, they're not going to be based on the public exchanges, meaning that the price that's set for those stocks. So let's say Netflix is a stock trader in one of these broker-owned dark pools. Netflix's stock may be 500 in the publicly traded exchanges, but in the private exchanges over here in the dark pool, there may be a different price for Netflix. There may be 505 or 495 may be the price for Netflix. So that's why we call it as price discovery. So the reason for that is people who are buying and selling in dark pool exchanges, they usually buy millions of worth of shares. They may be buying 1 million shares of Netflix or something like that. So when you want to facilitate such a transaction, there needs to be price discovery, because no one's going to agree to sell all of their such a large amount with just one price. So that's why there's a lot of supply there's a lot of liquidity in these dark pool exchanges, but there is also price discovery, so that if there are two parties that's willing to make a big transaction, the price discovery will help facilitate such a transaction. Okay, so that there can be some kind of negotiation. So that's a broker-owned dark pool. What is an agency-owned or exchange-owned dark pool? It's like the name implies, they are owned by agencies, Liquidnet, ITG POSIT, or by the exchanges themselves, BATS, NYSE, Euronext. So these are public exchanges, and public exchanges also own a dark pool. So they can be agencies or they can be exchange-owned dark pools. And the difference between broker-owned and agency/exchange-owned dark pool is that the prices of the stocks, they are derived from the public exchanges, meaning there is no price discovery in this. The price of the stock is derived from public exchanges. Okay, that's the agency-owned or exchange-owned dark pool. The last type is electronic market maker dark pool. So these are dark pools offered by independent operators like GetGo and Knight for their account holders. Transaction prices may not be derived from public exchanges, so there's price discovery. So these are electronic market makers. So you have, high frequency trading firms. So if you want to buy a large amount of stock from a dark pool through a computer, you would just program it and make those purchases through those dark pools. And like our broker-owned dark pool, these are private dark pools, so there's no price discovery. There is price discovery, and it's not derived from the public exchanges. Okay, so these are the three different types of dark pool. Now, if you as an investor want to buy certain securities, a large amount of securities, you can technically go to one of these dark pools and make those transactions. There will be some kind of fees associated with it, but it's not going to be as high as making those transactions in the public exchanges. So that's why a lot of these big players, none of these big firms, Wall Street does not like fees. So that's the big thing. They don't like it. That's why they hate stock splits. So when stock split, they're going to spend more money in terms of fees. That's why they don't like it. And one of the main advantages of making transactions in the dark pool is that the fees associated for making those transactions is not as high when you compare it with public exchanges. Okay, I hope that these are clear. It's just a bunch of general knowledge for you guys, so that you guys know the 3 different types of dark pools, and hope that this helped. Now, we discussed what a dark pool is. It's just a private exchange for facilitating large transactions. Now, why do we use dark pool? Dark pools came about primarily to facilitate transactions for institutional investors who did not wish to impact the markets with their large orders and obtain adverse prices for their trades. Now, take a good example. You're an institution. You have billions of dollars of asset under your portfolio, and you want to make a transaction. Let's say you want to buy 1 million shares of some stock. Okay. Now, if you go into your brokerage account, like whatever account you use, let's say you put in $1 million worth of shares. You hit a limit order, and you place that order. So that order is going to come by in the order book. It's going to be visible. A lot of algorithms and high frequency trading computers are going to know that someone out there, some big fish, wants to buy crazy amount of shares in the public market. So what they're going to do, they are going to, first of all, the order is going to be visible to everyone. So what's going to happen is everyone in the market realizes that there's some big player coming in, something's going to happen in the stock. So everyone tries to bid up the prices, and the stock's going to go rally like a crazy amount. Now the person trying to buy this 1 million shares is not going to get a good fill, even if they do a market order, because once everyone sees the sudden demand, the stock's just going to rally. And what's going to happen is this person who's ever trying to purchase those shares is going to affect the prices of the stock, and they're not going to get good fills for their trades. Now, as an institutional investor, first thing, you don't want the whole world knowing that you're purchasing 1 million shares of so-and-so stock. All those reports, all those institutional transactions, some of them reported every day. So like ARK trades, you can see what ARK purchases every day, but some they do not release it until the end of the quarter. Okay. Number one, that's the number one point. Number two is they don't want to impact the market in any way. So they don't want to cause volatility in the market, because that does not benefit anyone, especially not them, because they don't want prices to be affected because that's not in their advantage. So that's number two. So these are the few reasons why they don't want to, you don't never see institutional investors make large transaction in the public exchanges during daytime. Okay. Now, we have that as an advantage. We also have an aspect of anonymity. So these transactions made in the dark pool, like I said before, they are not reported immediately. So they don't, if the market's trading currently, they make a transaction in the dark pool today, that's not going to come in until tomorrow. So they already completed the transaction. And so there's no one really knows about it, except that someone bought a large share. The identity of whoever made the purchase is still very secretive. No one really knows that transaction is complete and who the buyer was. So that's kind of another advantage for dark pool as well. So what are the disadvantages of dark pool? So number one disadvantage is pinging by large firms using high frequency trading machines. So what does that mean? What is pinging and what is high frequency trading? So pinging is a strategy in which the high frequency trading firm sends many small orders to an exchange. So high frequency trading computers are essentially super fast computers that trades against you. They are what we call as algos. So we say that the algos are trading against us. It's all the algos pumping. We say all these terms in our chat if you're there. So all these terms that we use interchangeably refer to a computer, trading computer, and bots and high frequency trading computers, which are super fast. So a good example of high frequency trading operation is a lot of high frequency firms. What they do is so there are multiple exchanges, right? So we have different exchanges. We have BATS, we have NYSE, we have so many other exchanges. What they do is all these exchanges are going to have different price for their fill. So how fast high frequency trading firm machines are, they buy stock ABC from one of the exchanges for a lower price, and they are fast enough to sell it in a matter of seconds to another player in a different exchange for a higher price. Maybe it's not a great price, but they are willing to make the transaction to gain a couple of cents. So that's how fast they are. In seconds, they can make a transaction, buy for sweep off of one exchange for a lower price, and make the transaction in a higher price. So that's why when you do market orders and such like that, it's very risky because you never know what kind of fill you're going to get. Either the market maker is going to screw you, or like there are a lot of elements, computers out there to make take advantage of you in the market. So especially when you put a large order in the order book, there's a good chance that all the algos are watching, and market makers are also going to know about it. There's a good chance that you can get an adverse fill. Okay, so that's high frequency trading. So what is pinging? So pinging is a strategy in which high frequency trading firm sends a small amount of orders to an exchange. If these orders, by exchange, I mean dark pool exchange, okay? If these orders are filled instantly, the high frequency trader can infer that on the other side of the trade is a big investor looking to move a large volume of shares. The high frequency trader then takes this knowledge and uses it against the big investor by moving the stock price against him. So let's take a look at this example. This is a lot of lines for you to understand. Now, let's say you are a high frequency trading firm, okay? And you place bids and offers in small lots like 100 shares for a large number of listed stocks. So let's say you just put a 100 share order for buy order for Apple, Netflix, Facebook, Amazon, Google, Tesla in the dark pool exchange. Okay. Now, when the high frequency trading firm puts such a small lots of orders, and if an order gets filled immediately, if they get if let's say stock Tesla gets filled immediately in the dark pool exchange, so then what these high frequency trading firm infer is that someone on the other side of the transaction is accumulating large volume of shares of Tesla. If they keep sending 100 shares, someone else is buying on the other side immediately. Then they know that someone out there is accumulating a large volume of shares, meaning someone out there may be accumulating maybe $1 billion worth of Tesla shares. You never know. There may be a hedge fund sitting out there trying to accumulate all the shares of Tesla. Okay, that's the information that they get. So they ping something, they ping a few shares that gets filled immediately. Then this alerts the high frequency trading firm to the presence of a potentially large institutional order for stock XYZ. In this case, it's Tesla. The high frequency trading firm would then scoop up all available shares of XYZ Tesla in the market, hoping to sell them back to the institution that is a buyer of the shares at a higher price. So now that they know that there is a large player in Tesla in the dark pool, what this high frequency trading firm does is they go back to the public exchanges and they try to prop up the prices of Tesla. If Tesla is trading at 500, they try to pump it up to 520, 530. They can easily do that by just bidding the ask, but they bid up the stock price, get the momentum flowing, and then every retail trader and everyone is just going to follow the momentum and pump up the stock prices. That's market manipulation, and it's totally legal. And they do that. All these high frequency trading firms, they do that. All these computers are trading against you all the time. You don't know why a stock's moving. Sometimes you just see no news to it. They just pop, and they have the high frequency trading firms and market makers. They have the power to prop up stock prices. So when that happens, what's going to happen is this trading firm is going to accumulate a large volume of shares of Tesla, and they're going to come and sell it at a much higher price to the institutional investor in the dark pool. So what's happening is this person, this institution, whoever decided to go to the dark pool to not impact the public exchanges, got exactly what they didn't want to do. So this high frequency trading firm, what ended up doing is they propped up the cross prices and they ended up screwing the institution over there. So that's pinging by large frequency trading firm. Now, technically, you can also get pinged. So if you are out there trying to buy 100,000 shares of Tesla, you may not be the only one. There may be thousands of others doing the same thing. So high frequency trading firm, once they get enough knowledge, they will execute a big operation by pinging, and they're going to get a very bad fill, okay, at a much higher price. Now, how they profit off of this? They're just manipulating markets. They're buying low and they're selling high. It's just that they're not doing in the public exchanges, they're doing this in the dark pool. This is a very controversial topic. Pinging is a very controversial topic, but it's a legal thing that's done by HFTs. And although the SEC have recently, put up a lot of rules and regulations, they're under a lot of scrutiny, but it's still completely legal, and there are no regulations to prevent that as of now. And so the other disadvantage of dark pool is a general consensus among retail investors is that institutions do all the shady work in the dark pool behind without anyone's knowledge. So the general secrecy of dark pool is not appreciated by retail investors. So good example would be we all know that institutions and smart money get the news before everyone else. So with knowledge like that, what smart money does is they move a large block of shares behind the scenes, and when the news really hits, retail investors end up getting fleeced. A good example is if market's going to sell off in the next couple of days, there's some kind of news is happening, and a good example would be the coronavirus sell-off that happened. So we saw a lot of dark pool transactions during that time, insane amount of transactions. Smart money knew beforehand that this was going to happen. They moved a lot of shares in the dark pool already, and retailers ended up getting living through that whole sell-off. No one thought that it was going to be such a dramatic sell-off, and it did end up selling off. And when the fear was at all-time high, again, our smart money stepped in and bought the dip, and they made millions and billions of dollars on the way back to all-time high. Okay, so a general, that's one of the disadvantages. I mean, it's not a disadvantage for the institution, it's a disadvantage for retail traders because they do not have visibility into what's happening behind the scenes. Okay, so that's one of the reasons that we use dark pool and the disadvantages. Now, this is a screenshot of Flow Algo, the app that Aristotle just showed you. On the left side, you see the options flow. You see what are the options coming in, whether they're a split or a sweep or a block. You see what the premium is, strike price, whether the call or a put, the spot price. You see all bunch of stuff here. On the right side, you see something called as equity blocks and dark pools. Now, the ones that are highlighted with purple, they are dark pool prints, meaning these transactions took place in the dark pool exchanges and not the public exchanges. So the one that are not shaded with the purple, does not have the purple box, that's a typical equity block trade. Okay. Hope you guys got this. Now, let's go review dark pool orders in Flow Algo. Dark pool orders in Flow Algo can be classified into two types: signature dark pool orders, also known as signature prints, and regular dark pool orders, or simply known as dark pool orders. So there are two types. One is signature prints, and one is just a regular dark pool order. Okay, I'm going to teach you what a signature print is because that's more important in my opinion than a regular dark pool order. So we will go over signature prints now, and then I'll tell you about dark pool orders later on. So what are signature prints? Signature prints are late dark pool orders coming in from the previous day. They are characterized by a specific block size. Now, this screenshot that you see here on Flow Algo, signature block sizes are represented by a certain share block size. So for SPY, the block size always starts with 501, 502, 503, and 504. For the Qs, triple Q, 410, 411, 412, and 413. For IWM, that's the Russell, 251 and 252. For the Dow Jones Industrial Average, it's 250 and 251. So a simple share block example would be 501, 565, or 502, 565, 503, 565. So the first three digits is always going to be the signature share size. Okay, so if you see a share block like this over here, that's a signature dark pool signature print. Okay, so over here in this case, you can really see that the share block is divided by 2. So 250, you add these two, you know that that's the dark pool order of 1. Okay, so in this case, the orders were split. That's why you see 73,250,975 and another 250,975. You add it up, you will get a share block of 501, Okay. Now, those are signature prints. Signature order are only available for ETFs, SPY, Qs, IWN, and DIA. So if you see a signature block order in Flow Algo, it's know that it's going to be of this share block size and that it's only going to be available for the 4 ETFs. Okay. If you see a different stock like CAR or XLU or CNX, CAR, it's not a signature block order. It's just a regular dark pool order. Signature prints are only available for the 4 ETFs. Okay. Now we're going to learn how to read and interpret all these signature prints. So example number 1 is a bearish print. On October 10th, 2018, there were 37 SPY signature prints. Okay. So on October 10th, you see all these SPY blocks here, SPY dark pool orders. And look at the quantity size, number 1. 504, 504, 504, another 504, 504. We have a 637 here and another 504, 504, 504. Everything is 504 here. This 637 is not a dark pool order at all. Okay, it's a regular order. Oh, sorry, it is a dark pool order. It is not a signature print order. Okay, we have the purple box. I forgot. I didn't see that. Okay, so what does this tell you? This is a signature print order. The spot price, that is the price the transaction took place, was 287.40, and each of the block is valued at 145 million. So we have like so many 37 SPY signature blocks of the same share size and the same spot price and the same value as well. The OHLC for October 10th was the open, high, low, and close OHLC. So on October 10th, SPY opened at 286.33. So that was the opening price for the day. And the high was 286.91. The low was 277.88. And the close, meaning SPY closed that day on October 10th at 278.30. Okay, so this is what happened. Remember, I told you that candlesticks can tell you the whole story, what happened during that day. So this is what happened during that day. SPY opened at the top at 286. It briefly spiked high, like 50 cents, and then it started selling off. Closed, the low of the day was 277.88, and the close was 278.30. So SPY, the candle was a red candle, and it was wicking, and the SPY closed near the low of the day. So that's what happened during that day. The spot level for the signature print was 287.40. So that's the print's spot price, 287.40. Now, the important thing that you would note here is that the print came in on 10/10/18, on October 10th, 2018. But on October 10th, 2018, SPY never traded at 287.40. Look at it. SPY opened at 286. That's lower than 287.40. The high of the day was 286.91. So it's still lower than the print level here. And SPY closed near the low of the day. So SPY never traded at this price for the transaction to have been taken place on that day. So you might want to question, so how did this happen? Remember, I told you that dark pool transactions aren't reported until the next day. And in this case, you have to assume that this transaction took place the previous day. So let's read this again. The spot level for the signature print was 287.40 for most signature prints, but SPY opened at 286.40. That is below the signature print level. Hence, it can be interpreted that big money was selling SPY blocks in the dark pool the previous day. Now, if you were someone that has access to Flow Algo and just checks on the dark pool prints every day, I know a lot of traders out there who just study dark pool religiously, especially when the market's at all-time highs or when it's at a crucial level when you don't know what's going to happen next. Because if you really want to know what's going to happen next, you want to know what smart money is doing, because they know what's going to happen next. Trust me, they know what's going to happen next. And so over here, the print level displays with a red background, the stock opens below the print level below the signature level. So now you notice that these signature prints have a red background, right? All these small blocks over here has a red background. So the reason it appears red is because Flow Algo likes to color code things so that it makes it easier on the eye. So without even looking at the open, high, low, and close, if you just look at this image here and you see something shaded red, then you know that the SPY on that day, on that given day, on October 10th, opened below the print level. Okay, so if it's shaded red, you don't even have to look at the OHLC for that day. You just can interpret that, hey, it's shaded red, so I know that SPY opened below this number here, 287.40. So that's a good thing on Flow Algo. They made it easier for you. And there's also another information. The red dot is displayed when current price is below the print level. You notice that there is a small dot here. I don't know if you can see it. So there's a small dot here that's shaded dark red. So that's actually a dot that indicates what the current price of the stock is relative to this print level. So the current price of the stock is lower than the print level. It's going to be shaded red, and that indicates bearish. It can be indicated as a bearish indicator. Now, if the current price of the stock is above the print level, this dot is going to turn green. It indicates that the print level was 287.40, but the stock price is currently above 287.40. So it's kind of an indecisive print now because SPY opened below the print level, but the current price of the stock is above the print level. So it's an indecisiveness, which I will explain later. Okay, but I hope you guys can understand this. Now let's see what happened, how you can interpret this, and what happened in the coming days after this many prints came. We had 37 signature prints on October 10th. Okay, so what are the observations? This is October 10th here. This is when SPY was trading at 287.40. SPY opened below the print level. So SPY opened below 287.40. SPY never tested the signature level, nor did it break above the signature print level. So SPY opened below that level and never did on that day. It never broke above the print level at all. It was like a resistance. 287.40 was a resistance here for us. So SPY never tested that resistance and never did break that resistance on October 10th. The SPY signature level needs to be treated as resistance. SPY closed near the low of the day, signaling weakness and bearish continuation. So now since we had a big sell-off here, selling pressure was high, SPY closed near the low of the day, that's a very bearish sign for the market. Now what happened the next few days? SPY actually started selling off the next few weeks, entering a bear market phase. We had a small retracement. Stocks don't move in a straight line. So we had one sell-off followed by another selling day. Then we had a small retracement and then eventually sold off, and market actually bottomed here, sold off again, sorry, retraced again. We had a range like market like we having currently. Market's currently range bound. So we sold off a little. Now we are trading in a range. Now what's going to happen next? We have to watch the dot poles to really know what's going to happen next. So we're trading in a range, and eventually SPY broke below the range and we entered a bear market here. Okay, now all this looks very similar, familiar, right? So, but you can clearly see the powerful of dark pool prints here. Smart money, each block contain 145 million worth of shares, and we had 37 signature blocks that day on October 10th on just one day. This is like insane number of blocks. And what happened the next few days? Smart money really took profits. I mean, 287 was the top, this level. They probably sold throughout this level. So we probably only observed this on that print level day, but smart money probably sold, distributed their shares this entire area here. And then once they sold, eventually market started to tank. Big sell-off that happened the next couple of weeks. Okay, so this is an example one. Example two is a bullish print on December 26th. So this is an exercise for you guys. Before I explain, hope you guys can connect the dots, but I will explain it anyway. On December 26, 2018, there were 43 SPY signature prints. Okay. Now what the print level was. This is how you would analyze it. So once you know how many prints came in, first thing you need to do is check the spot price, 234.32. See if all these blocks is a signature prints. 504 is a signature block size number, and SPY is an ETF. We're good to go. Okay, so 234.32 was the print level. Now, what is the OHLC for December 26, 2018? Opening was 235.97, high 246.18, low 233.76, and close 246.18. Okay. Now, without even looking at the OHLC, you can clearly tell that since this is shaded green, SPY actually opened above the print level. 235.97 is above the print level. Okay. And what that indicates is that it can be interpreted that big money was buying SPY blocks in the dark pool the previous day. So we had 43 dark pool print levels on that day. Okay, so that's even more than the previous time when market sold off. And what else can you interpret here? We have a green dot here. The green dot indicates that the current price of SPY is above the print level. Okay, so that's also a very bullish sign. So currently the stock is trading above the print level. This print level, we can consider that as a support level. Okay, so that's a thing that you can interpret from this dark pool uh, blocks. So now let's see what happened in the chart. So on December 26th, SPY opened above the print level, which is the bullish sign. SPY broke below the print level briefly, but quickly reclaimed it over here. So you can clearly see that the low of the day for the stock was 233.76. That's lower than the print level. Okay. So when that happened, the stock actually broke support. So our print level needs to be considered like a support. When stock broke that support level, okay, you needed to question this print as a sell block. Remember, dark pool orders, whatever comes in, you don't know the intention of this order. You don't know if it's really a buy or a sell order. You get the transaction reported, but you really don't know if it's a buy order or a sell order. The only way for you to make sense of that dark pool order is based on the current stock price. You have to like get it through your head that smart money knows what they're doing, and they know what's going to happen next. So they complete a transaction and the current price of the stock is trading above that level, then that's a buy order. If the current price of the stock is below the print level, then you need to treat that as a sell order. Okay. So in this case, briefly, maybe for a few cents, SPY actually broke that support level. But then what happened? It just bounced. The bulls bought the dip like big time. We had a big candle, and eventually the next few days we rallied and we entered a new bull market. So that's what I mentioned here. So SPY closed near the high of the day, signaling reversal and bullish continuation. SPY started rallying the next 3 weeks, starting a new bullish uptrend. So clearly, whoever bought the dip here, they made a lot of money. Smart money sold the top and they bought the dip. This is when fear was at all-time high. Everyone would have been buying puts or shorting the market, but smart money really bought the dip. They took the prices higher. Third example, bearish print. Again, this is a exercise for you guys. Just do it along with me. On January 30th, 2018, there were 22 SPY signature prints. So clearly see if the first thing that we need to look at is the spot level, 284.74. The quantity is a signature size for all these prints. There were 22 prints on that day. All the prints were shaded red, so we know that SPY opened below the print level, 284.74, confirmed here because SPY opened at 282.60. And the print level was shaded red. We have a red dot here indicating that the current price of the stock is below the print level. So SPY never really traded above the print level. 284.74 is the high of the day. So it never really broke that level. So this would have always been shaded red. Okay, so that's how you interpret this level, and that's what I've explained here. Hope that was clear. What happened for this print level? You can clearly see 284.74 was the print level. It was literally the top. We had 22 signature prints. The next SPY never broke that level, so the resistance was never broken. This level was the print level. That was the resistance. You have a big gap here. SPY sold off like crazy, and the bottom was 252. The top was 284. There was a $30 sell-off. And you clearly see we started to trade in range bound market after that, and eventually, so literally smart money sold the top here. Okay, so that's how you interpret this print. Now, if you have a service like FlowAlgo or Blackbox, these dark pool orders feed are reported every single day. And I know a lot of Twitter accounts. There's a good one called Melstone, Melstone. So she actually reports. She's from Blackbox. She's an admin in Blackbox, and she reports all the dark pool feeds on her Twitter page, especially the one that looks really suspicious and maybe of interest to everyone. She reports them on her Twitter feed. You can give her a follow. and see if without subscribing to any of these services, you can get the same information and make use of it. But if you do subscribe to any of these services, you will be able to analyze the prints like how I taught you, and try to see what smart money is doing. So if there is a really big order coming in on any given day and market is at all-time high, or you think there's something going to happen, you will get a warning sign beforehand, and you may, so when you see a market dip like that, you may think that that's just a pullback and this is a bull flag and the market's just going to rally after that. That's what typical investors think. We think that stocks don't move in a straight line. We had this big rally, so we're just getting a pullback. It's probably a moving average going around here. We're just going to rally here. But if you watch the dark pool, then you know that that's not a pullback. We had the big selling order here, so you may hedge yourself here or take some profits before the big selling happens. So that's the key use of a dark pool print order. So you don't want, you probably will not trade like the institutions, but at least you will have a heads up on on big events like this. When something big happens in terms of block size numbers, and you follow the dark pool, you can be play it safe and take profits, or even play the downside move. Okay. Now interpreting reversals and prints. Now, like I said before, if the current price of the stock, so in this case, the bearish print, stays below the print level, we have this red dot. But at some point, if the price actually breaks above this print level, this becomes a green dot. And then when that happens, the price actually breaks this resistance, you may want to question your directional bias. So if you think that the order that came in is a sell order when the market opened, but then price of the stock actually broke that print level, then you may want to question your directional bias and observe the price for the next couple of days, just to make sure that that order is indeed a sell order and not a buy order. Because if you think just because stock price opened below the print level it's a bearish print, that you may be wrong, because this level here does not tell you anything that is a buy or a sell. It's just a print level, so you need to treat that as a resistance. And as long as price stays below that level, then that's a sell order. Okay. If you've seen any of my SPY charts, my SPY analysis on TradingView or Twitter, you would notice that I have always have dark pool levels and markets at all-time highs. So I trade based on that level. If market actually breaks that level, then you know that the market can keep going higher because smart money is on your side. But if this resistance is really strong and SPY continuously gets rejected by that, then you can assume that that's a strong resistance and smart money already sold off that position. So you can prepare for more downside moves. Okay. So that's what I've explained here. That's the interpreting reversals in print. So if you see a green dot in a red print and a red dot in a green print, know that nothing is confirmed yet. You may need to observe the stock price for a couple of days before confirming your directional bias. Okay. If there's more signature prints than usual, pay attention. This is often what precedes big moves, of course. So what's normal and what's not? Anything lower than 9 is normal or average. So on a typical day, if market is trading, SPY just moves 1% or 50 cents percent, then that's a normal day. On those regular days, you just won't see the too many dark pool prints. But if you see something above 15, that's above average. That needs, you may need to pay attention. Market may be gearing up for a big move. Direction is to be determined, but it's gearing for a big move. And if you see something 20 plus, that's extreme. And that just tells you that something huge is going to happen in the market. And all the examples that we went through today, we saw, let's see what we saw. We saw 22 prints, we saw 43 prints, and we saw 37 prints. So when the print level was more than 30, see how big price action was, see how big the magnitude of sell-off was here, and see the magnitude of the buying here. When market was at over here, fear was at all-time high. When you saw such a big print here, that just shows you that they really bought the dip over here, and they probably continue to buy the dip throughout this days. So what retail money would have thought is all these were just pullbacks. We're just gearing up for a bigger drop, but bulls were in control. They kept the prices, just bid up the prices more and more. Okay. So always look for above average and extreme crunch. That's the lesson here. Okay, so that's for dark pool. I hope that you guys learned a lot. It's a very interesting concept, and especially as a retail trader, you want to have as many tools in your arsenal as much as you can, because you're never going to get the same kind of information as the hedge funds and the smart money out there. So having multiple tools in your arsenal, like flow algo, meaning looking at options flow, seeing what the big players are doing, looking at equity block trades, looking at dark pool orders. All this information is going to supplement your trading and is going to help you stay ahead and trade with the smart money. Remember what Wyckoff said, you want to trade with the smart money and not against them. Okay? All right, anyway, equity blocks is another topic for today. So what are equity blocks? Block trades are single large trade orders of NASDAQ and New York NYSE, New York Stock Exchange listed stocks that are at least 10,000 shares big. So you may have, the other day when I showed you guys Benzinga, I showed you that I was watching block trade orders, equity block orders. So these are nothing but large single size orders that has some order size greater than 10,000 shares of NYSE and NASDAQ shares stocks. So since only institutions and extremely wealthy investors can afford to make trades this size, block trades are typically seen as smart money trades. So just like dark pool orders, which gets executed in a private exchange, uh, these equity block trades are considered smart money trades, but the only difference between dark pool is that these get executed in the public exchange directly. Okay, so whatever orders that gets executed in the block houses or whatnot, those orders will be seen a very in a short duration in the tape immediately. So if someone bought 10,000 shares of Netflix, you'll see that in your times and sales. Okay. These trades can be placed in public exchanges if there's enough liquidity in the stock. However, this can cause volatility and huge price fluctuations. So the reason that I was watching equity trades in Benzinga or in Black Box is that when someone makes a big purchase like that, you will see a huge volume and huge volatility in the stock. And as a trader, volatility is our friend. We want stock prices to move by a large amount. We want momentum. So if someone makes a big purchase, a lot of traders are going to be taking a look at the stock and they're going to participate in the stock and make prices go either higher or decline at a faster rate. And by watching equity blocks, we can see what smart money is up to, and by interpreting whether that's a buy or a sell, you'll see the stock price move by a significant amount in a coming in a short period of time. Okay. So the only con is that when you place such a big order as a trader, you may like volatility, but as an investor, you may not like volatility. You want the stock price to go at a slow pace without causing volatility. And if you're someone that's trying to execute transaction, if you're trying to buy shares, you don't want the stock price to keep rallying as you keep making purchases. So executing such transactions in the public exchanges can cause volatility, but there's no way of avoiding it other than going through the dark pool. Okay, so all these equity block orders, what these block houses do. So block houses are organizations that like actually handle these equity block transactions. So what they do is to reduce the volatility in the market. So if someone wants to buy 100,000 shares or a million shares of Netflix or something like that, what these large block houses do is they typically are executed off the exchange through intermediaries called block houses. So blockhouse transactions, what the primary role of them is to reduce volatility and to maintain order in the market. So they do a bunch of things, like for example, let's say one hedge fund wants to sell 1 million shares of Netflix. Okay, so what they do is they can act as matchmakers. So the blockhouse finds this seller and they find another buyer in the market who's willing to purchase 1 million shares of Netflix. Then the blockhouses can act as matchmakers to facilitate the transaction. And once the transaction is complete, they will report the transaction to the exchange in a timely manner so that it's reported in the times and sales and you can see that transaction being complete. So this will all happen in real time. So once the transaction is complete, it will be reported and you'll see that as a volume block in the stock. Okay. And another role that the block houses or intermediaries play is that, so when they get a big sized order coming in, someone wants to buy 1 million shares of Netflix or whatnot. So what they do is they break down the equity blocks into smaller sizes, send it to different brokerages for execution to lessen market volatility. So when they get a big order, they know that they have to complete that, facilitate that transaction for their customer. So instead of just making it one single order, big order, they break it down into smaller blocks, execute it through different brokerages so that all the high frequency trading computers and algos, they don't notice this transaction pattern readily. They mask it and they complete this transaction. So that's another role of intermediaries. So the reason I'm explaining this to you is I want to give you guys background on how all these things work. You may see a lot of block trades coming in, like hundreds and thousands of block trades come in every single day. Not everything is going to be something worth looking at, but some of them might be worth looking at, especially if they cause volatility in the stock or make the stock prices rally. Every day you have some orders, and I'll show you in the next slide what they look like. Okay. Now, to summarize, equity block trades results in volume surge in the stock and gets the attention of both investors and traders. Equity block trades can be spotted in platforms like Flow Algo, Benzinga, Blackbox, etc., and this can also be displayed in the order book and the tape in real time. So once your transactions are reported, you will also be able to see them in real time if you have level, if you watch it in the level 2 and times and sales. Okay. So show you different screenshots. The left side, you have Flow Algo. We know that the ones with the purple box, they are dark pool prints. So we have EQR, we have Viacom, we have IPN, RRR. So these are dark pool transactions, prints coming in from the previous day. And the ones that don't have any box, those are just equity block prints. So over here we have XLE, 300,000 shares at 39.14. Someone made this transaction for $12 million. And GLD 258, 500, 162.25 was the spot, $42 million worth. Someone made a purchase for Qs, 69 million. So these are transactions that happen every day. You can clearly see smart money makes transaction through block houses because they move such huge sizes that they can't keep bidding stocks in the public exchanges. They can't make this kind of transaction in the public market because that's going to make the stock go crazy. So they go through block houses because block houses typically they have a good liquidity. If someone wants to buy it, someone's going to be selling it. They act as matchmaker, facilitate the transaction, and boom, it's complete. It'll be reported to the exchange, and I can move on. Okay. And if they really want secrecy, then if they don't want anyone to know that someone out there is making X amount of purchase for so much money, they go through the dark pool. Okay. Because dark pool transactions are reported only the next day, and no one really knows if that was a buy order or a sell order. Okay. And the one in the middle is Benzinga. Benzinga, you can clearly see what these are equity block trades. I think throughout the day, you will see all kinds of trades getting reported. You have CDV, KOS. The only good thing about Benzinga is that it does not only report NYSE and Nasdaq stocks. They also report smaller stocks that gets unusual flow as well. So that's a good thing. You have a lot of block trades coming in. If you're someone trading equity, you want to see all kinds of stocks getting volume and trading, getting good price action. Same thing. This is on the side. You have black box. Over here, you have different orders coming in. You see dark pool blocks, dark block of 5.6 million. So this indicates that this is a dark pool order. This is how dark pool orders look like in Benzinga, in black box. And you can clearly see what the order size is, what the share block is, and you can trade off of that. Okay. Now all you have to do is, all these platforms give you the same information. They just format it differently. Flow Algo, they make it more user friendly and they color code everything so that it's pretty obvious to you guys. But Blackbox has the same kind of information coming in, and for a flow service, I think Blackbox is definitely superior compared to Flow Algo because they also report all the flow transactions that's filled below the bid as well. They have dark pools, they have equity scanner, so it's a nice platform. Okay. Now, the last portion of our lesson today, the key levels feature on Flow Algo. So this we have a separate section in the website of FlowAlgo called as key levels, and what this essentially does is key level shows you the volume, money flow, average volume of a security has traded at a certain price levels for a certain period. These levels can be considered as key levels of support and resistance to help you form directional bias. Now, I'm not going to say anything. Uh, I just key in the symbol, I key in a date, and I key in the strength. So filter out for weaker trends 0 to 100. So this strength indicates how strong that level is. Okay, it's kind of like I'm not going to explain, but look at this. What does this look like? Doesn't this look like our volume profile indicator? For each level of the stock, each price point over here, each price zone, what that level of volume was. Doesn't it look like that? So it's exactly that, it's the same thing. And when you see the strength level as 20, that's why it's shaded as, this is like our value area here. Okay, so that's why it's shaded red, shaded much with a lighter tone here. So what this is telling you is which level in the chart is considered as a high volume node and which is a strong level. So when I first reviewed this class, when we first started AMU, SPY was actually trading below 300 and we were just recovering from the bear market. Okay, so I was just telling the first batch, we're going to cross 297.89, which is a high volume node here. We have 17 billion worth of prints like buying and selling here happening. If we pass this level, we have a $4 gap up to 301, and that's a big move for the market. So that's a low volume node here. So once this level was broken, there wasn't really that much money behind this. So we only had low volume nodes here. The next significant node was at 321, and everyone knows what happened once we broke 300. We just rocketed back to all-time highs. And similarly, over here, we have lower levels here. So this is a level of, once we broke this level, this is a level of support now. And below that, you can clearly see once 297 level is broken, we have a lot of low volume nodes, and the next level of support is 288. But you guys can clearly see this, right? So the key level is essentially just volume profile. It's just represented in a prettier format on the website. You can use our volume profile indicator that I just taught you in our last lesson to get the same information. It's already in your chart and use it the same way. But if you want to look at a prettier picture, you can always go to left key levels feature, key in whatever stock you want, key in the start date, and key in what the strength you want to set at, and hit go. You'll get the same information. Okay. Now you know how to interpret this trend, but just going to go over it again. If SPY breaks and closes above the 297.89 level, it can be considered as a bullish bet with the next key level of resistance at 301.09 and 302.49. Okay. I hope that this was useful. This is something that we reviewed in our last class, but FlowAlgo also offers a similar feature. I hope you guys enjoyed this lesson. Now I'm going to hand it off to Mike. Thank you.
Hey guys, welcome to week 3, day 3, AMU University. Before I get started today, I just want to make sure everyone can see my screen and everyone can hear me well. Perfect. All right, so let's go ahead and get started. Today, I'm going to be talking about level 2 and times and sales, which is confusing to a lot of people, especially if you're a beginner. But I'm going to try to break it down, make it a little bit easier to understand for you guys. So what is level 2 and what is times and sales? Well, level 2 is the order book for the market. It shows you pending buyers and sellers, size of the buyers and sellers, and through which exchange they're buying or selling. Level 2 gives you information as to what price people want to buy or sell, but have not yet been filled. Level 2 can provide you with insight as to where support and resistance levels are and whether demand is weighted toward buyers or sellers. Times and sales is the real-time data feed of orders placed for a security. So what's the difference? Level 2 are pending orders, so orders that have not actually been executed yet, but they're pending buyers and pending sellers. Times and sales are orders that have been executed and you are reading them on the tape. So those are times and sales are orders people have already been filled on. All right. Each order shows you the price executed, the date and the time it was executed, size of the order, and which direction the stock was ticking at the time of the order. So these are the components of level 2. Now this is what it looks like if you're using Thinkorswim, the platform. You know, every level 2 and every times and sales basically has the same components, but this is exactly what it looks like on Thinkorswim. So on the very far left side, you'll see the exchange, right? So this is NASDAQ, EDGX, you have BATS, ARCA, PHLX, New York Stock Exchange. These are just all the different exchanges on which people are awaiting to be bought or sold on, okay? So let's say this is the bids, right? So this middle section is the bids. These are your buyers. Left side is buyers, right side is sellers. But these are pending buyers. So that means that everything on here, on the left side, is below the current share price. So if you look up here, this left in the red, that 807.60, that's the current share price of the stock. And everything you see on the bid below, these are pending buyers that want to get filled and be bought and want to buy up the stock when it gets lower. All right, so bids are pending buyers. And then your bid size is the size of that pending buyer. So how many shares, so this is actual equity, how many shares they want to buy, all right? And then you multiply this number times 100. So this 807.25, this is a pending buyer on the EDGX exchange, and the bid size is 5. So you multiply that by 100, and that's 500 shares. So someone on this day was looking to buy 500 shares of Tesla at 807.25 on the EDGX exchange. All right. So remember, left side is buyers pending, right side is pending sellers now. All right. And the same thing, it's just mirrored. Okay. So now we have exchange, BATS, New York Stock Exchange, EDGX, ARCA. You know, these are all big exchanges, Amex, right? So same thing, you have that left side, your exchange. The middle column is going to now be your ask. These are your pending sellers. So each one of these people wants to get filled to sell or to short at a price that's higher than the current share price. So the current share price, like I said, is 807.60. Each one of these orders is above 807.60 because they're pending sellers. So they want to get filled higher than 807.60 on these cells. All right, so just taking one of these for example, you can see the New York Stock Exchange, all right, and then the 808 price point, and then the 1. So you multiply again that 1 by 100, so that would be 100. So someone was wanting to sell 100 shares of Tesla at 808 on the New York Stock Exchange. So that's the components of level 2. It's really not that complicated. A lot of people overcomplicate it, but just remember, left side pending buyers, right side pending sellers. Now you have different conditions of level 2. It's called stacked, and then you have thin. So stacked and thin level 2. When someone says that there's a stacked bid, right? So remember the left side, those pending buyers, that means a lot of people have buy orders at the same price point. It's very common to see at support levels. So if a stock is approaching a support level, then on that left side of level 2, right here, you're more likely to see stacked buyers, which is a lot of different buyers, pending buyers at the same price point. So if you saw 806, 806, 806, 806, that would be a stacked bid. All right. And then a stacked ask means a lot of people have sell orders at the same price point. And that's very common to see at resistance levels. So again, now looking at the right side, if you saw 808, 808, 808, 808 from multiple different sellers on multiple different exchanges, then that would be considered a stacked ask, right? So stacked ask means a lot of people have sell orders at the same price point, and those are pending sellers. So you would normally see that when you're getting close to a resistance level. A thin bid, on the other hand, means there are not a lot of buyers, so the price could easily fall through that level. A thin ask means there's not a lot of sellers, so the price could rise through that level. Now I'm going to show you guys examples of what each one of these looks like. So a stacked bid. I took this example from Tesla. I just screenshotted it that day. This is from Tesla, May 13th at 11:03 a.m. You guys can go back on demand and look at this if you want. But look down here. So this is what a stacked bid looks like. Like I said, you want to have pending buyers all looking to buy up the stock, all at the same price point. So you see 801, 801, 801, 801, 801, right? From 5 different exchanges. And then you have a bid size over here of 10. So you multiply that by 100, 10 times 100, and you get 1,000. So you have 1,000 shares, 1,000 shares, 1,000 shares, 1,000 shares, 1,000 shares. So now you have 5,000 pending shares looking to be bought up by Tesla at the price of 801, right? Now do the math. 5,000 times 801 is like $4 million. So it's quite a hefty buy-in at that support level. And you can see, look, in this red up here, that's the current price of Tesla, 805.11. Or when I took the screenshot, that was the current price of Tesla, 805.11. So these were people that you can't even see this on the chart maybe. Maybe there's not even a support level you can see there, but by looking at level 2, you can see there are pending buyers at large size waiting to buy Tesla at 801. So this was on the May 13th, 11:03 a.m. And I see it here. I say, what happens next? You ask, right? So it was at 805. What happens when it got to that 801 that day, that morning? Boom. So same time, look, May 13th, 11:03 a.m. It got to that 801, and that became the new support, right? So it kind of bounced off of it. It ticked off of it multiple times. You can see these huge wicks. So that's when all those orders got filled and huge money stepped in, right? So it got to that 801 and just plowed off of it, right? Went all the way up to 812. Now, I'm not saying you need to, if you're looking to scalp this, you don't obviously have to hold for that big of a move. That's a $12 move. But if you see that stacked bid incoming after it's been selling off, look, it was selling off for about 30 minutes. So now you see that big stacked bid come in and those orders actually get filled on the times and sales, then that's when you're going to want to take this trade for a bounce. You want to take Tesla for a bounce trade. And there you go. Boom. Very easy money there. Now a stacked ask. This is the opposite now. This is resistance. So when you see a stacked ask, you're looking at resistance. So this is from Shopify, May 21st, 12:18 p.m., right? So what does that mean when you have a stacked ask? Well, it's when you have multiple different exchanges all looking to sell at the same price point. So you can see 804, 804, 804, 804. So there's 4 different sellers all looking to sell at that same price point. So that means that 804 is going to be my resistance. Whether you see it on the chart or not, you can see it in the book right here. I don't even have to look at the chart. And that shows you 804 is your resistance. So what happens next? Boom, right? So it got to that 804, which by the way, you can see from the morning that was the resistance. It rejected it twice in the morning. But without even looking at the chart, you can just see on level 2, 804 is clearly stacking, right? So that's a lot of pending sellers. And then it hit that 804, rejected it like 5 times, like 4 or 5 times here, kind of bounced off of it about $7. So 804 all the way down to 797, rejected it. And then when it finally cleared it, it took so many attempts, but when it finally cleared it and held it with volume, that's when it clears the level. But until then, that 804 that you see on level 2 is your resistance. So there you go. Now a thin bid. What is a thin bid? This is from Tesla May 13th at 10:53 a.m. There's no stacking. There's a 300 share buyer at 8:13, but very spacey bids. So what do I mean when I say very spacey bids? All right, well, let's take a look. Okay, we have a pending buyer at 8:13. The next one after that, oh wow, 8:12.63. Okay, 8:12.55, 8:12.50. A little bit right here. Possible bounce at 8:12.50, but that's not enough. I like to see at least like 3 or 4 exchanges kind of stacking right there. And then after 8:12.50, look, wow, 8:11.85, right? So it just kind of, the bids are spacey. The numbers in between each of these different pending buyers is not enough to hold up the product. So what happens when it looks like this on a bid and the stock is already selling off? It just flushes right through the level. So this is 10:53. There were no buyers. If you're looking right here, there was no stacking. There were no buyers looking to hold this price point up, and it just flushed it. And you can see, 8:12.50, it did have a little bit of support, but nothing huge. So, you only saw 2 different buyers looking to get in there, and very small bid sizes, only 100 shares at each of those. So it just kind of flushes through that level. If it's a thin bid and it's already selling through, then it just flushes through that level like liquid. And then a thin ask, so it's the same thing but opposite. There's no stacking. You don't see any, you don't see any pending sellers all at the same price point. And then you have spacey sellers. So, it goes from 794.67 to 795, 79.10, 79.43, 79.598. A little bit right there, like I said, but that doesn't do anything. Just a couple, and especially with only 100 shares at the ask right there, nothing. And then after 795.98, 796.32. So these are very spacey, if that makes sense. Just a lot. There's not like 75.01, 75.02, 75.03. So what happens next? When it looks like this and the stock is moving up with momentum, it just flushes right through that level. So it just absolutely crushed that 794, 795, 796 level and just kept running up. Because if there's no pending sellers, then there's nothing that's going to prevent the stock from going down. There's no pending sellers. The ask size was tiny, so it just goes right through that level like a volcano. There are dangers involving level 2. Market makers can hide order sizes by placing small orders over and over again. Market makers can place large offers on the bid or ask, only to pull the order and reverse their position, making short sellers cover or buyers stop loss. You'll probably see this a lot, but over time, you just understand not to be tricked by it. But this is an example for you. So like, let's say you see a 500 lot ask size on Apple. Short sellers may believe someone is shorting Apple heavy, right? So if on that right side, you see a huge pending seller, short sellers may believe that someone is actually wanting to short Apple with a lot of momentum, and they want to follow that smart money. So you go to follow their lead, and then that order will disappear from the ask, and the market maker will actually buy a 500 lot on Apple instead of sell. So that's when you'll get snapped out of your position. And then market makers can hide orders by trading through ECNs, which are computerized order placement systems. So, a lot of the times on level 2, you're only seeing maybe 1/5 of the size that smart money is trading, because you can actually hide your orders through ECNs, or you can iceberg your orders, which means, hiding order size by placing small orders over and over again. So there are dangers involving level 2, but that just comes with time and kind of recognizing it. Pros and cons of level 2. So the pros indicates buying and selling action and where key support and resistance levels are. So I just showed you guys literally how to see support and resistance levels without even looking at the chart. Then you can gauge short-term price movement. So like I showed you with the Tesla example, we had the bids at 801, and without even looking at the chart, you can see, all right, there's a lot of pending buyers there. if those orders actually get filled on the times and sale, then I can tell short term that we're going to bounce at 801. You can take more profit from your trades. So if you see that there's a thin ask and the stock is running up, then you can know, there's no pending sellers, there's no big sellers with huge ask size looking to short the stock or take profit on a position. So you can, hold that position a little bit longer. And then you can improve your timing on trades, which I'll be showing in another lesson actually for the entries and exits of how you can enter and exit using level 2. And the cons of using level 2, I mean, these are just things that happen every now and then, but it comes with time and experience to understand that most people are not going to short 500 lots on Apple. So when you see something like that, it's most likely fake. So market maker trickery, price manipulation, and hidden trades through ECNs. Now, looking at times and sales. So remember, level 2, everything that I just went over is all pending. So that's how you can kind of see the future and judge where price action will go based on, those future pending buyers and future pending sellers. But now you actually have to understand times and sales. So these are orders that have been executed and have been filled. So this is how a standard times and sales is set up with Thinkorswim. It just shows you the time, the price, and the size. When it comes to time and sales, you don't multiply the size by 100. That's exactly how it is. So, on 513 at 801.9386, this was a fill for 500 shares. But this is how I think you should have it set it up, because you have to actually compare the bid to the price executed to the bid and ask in order to determine if it was a buy or a sell. Because a common misconception when it comes to times and sales is that green represents a buy and red represents a sell. That's not the case. You actually have to have the price at which the orders were executed and compare that price to the bid and compare that price to the ask. If the price at which the order was executed was closer to the ask or it was at the ask, then it will be a buy. And then if the price at which the trade was executed was closer to the bid or at the bid, then it would be a sell. So like this top one here, 801.65 was the price at which it was executed, 500 shares, and the bid was 801.65. So that was a sell because it was executed at the bid. So this is how I think you should have it set up. You're just gonna click that little settings button at the top. It's no big deal. And then add ask and add bid, okay? So you'll have your time, your ask, your price, your bid, and your size. So this is just a way easier way to see if that was actually a buy or was it actually a sell, just by comparing the execution price to the ask price and to the bid price. So key elements of times and sales. Times and sales shows all orders that have been placed on a security, both buys and sells. It shows the time that they were placed. It shows the size of the order placed, and you don't multiply it by 100. That's the actual size, how many shares were bought or sold. And then the price at which that order was executed. Remember, like I said, just because it's green does not mean it was a buy. Just because it's red does not mean it was a sell. The coloring on times and sales indicates the direction the stock was ticking at the time of the order. Now, most of the time, that being said, most of the time, if it's green, it will be a buy, and if it's red, it will be a sell, because obviously, if you buy into it when it's ticking up, it just makes sense, right? But it's not always 100%. So you have to actually compare the execution price to the bid and to the ask. If the order was executed between the bid and ask, it could have been a buy or a sell. There's no way to really know. So looking at times and sales, you're going to have what's called aggravated buying and aggravated selling. If you're watching times and sales and there are a lot of buyers coming in at or above the ask, you have aggravated buying and strong demand for upside. If you're watching times and sales and there are a lot of sellers coming in at or below the bid, you have aggravated selling and strong demand for downside. So I'm going to show you guys examples, of course. This is what aggravated buying looks like. So this is from Tesla, May 8th, 9:44 a.m. I have a lot of Tesla examples. I mean, personally, I think it's one of the easiest stocks to day trade. It has the most liquidity, volume, and range for the day. So this is from May 8th, 9:44 a.m. And you can see here, this is what aggravated buying looks like. So you do see a lot of green because, like I said, most of the time, if it is green, it's a buy, but not always. But how do you know for sure? Well, you're just going to compare. So you see the price at which it was executed, 797.16. And then you look at the ask was 797.17. So that was literally 1 cent away from the ask. This was 100% a buy. All right, so that was 100 shares bought at 797.16. But how do you know that this is aggravated buying? Because you can see that the ask, that the executed price keeps going up. So as you look, this is from the bottom to the top. This is moving on with the time. So as we go up in price, you can see all of this buying that comes in. 100 shares, 100 shares, 300 shares, 191, 154, 172. Look at all of this money that's flowing into Tesla and at the ask. So if there's not aggravated buying, then you'll see a lot of orders coming in kind of like at the midpoint, maybe a little bit close to the ask. But look at all of these orders that were executed. They were executed at the ask. 797 at the ask, 797 at the ask, 797, 797. And this is just hundreds, this is thousands of shares being executed, and they keep lifting that price. So when you get massive orders, 386 shares, 250 shares, they're lifting that ask price. So if you're looking from the bottom to the top, which is how you read times and sales, they're actually lifting and increasing the ask due to the amount of money that's flowing into Tesla. So this, this was at 796.40 down here at the bottom, and then we go all the way up to 797. Now come down here and take a look at this middle one. 1,125 shares executed at 796.80, and the ask was 796.89. All right, 1,100 shares at 796. That's a huge position. That's almost $1 million position just right there. Okay, and then you just come down here and look, okay, 310 shares, 418 shares. These are all, coming in, and they're actually lifting the ask. They're making the ask higher. And then come over here, look now, this is just a couple minutes later, maybe even just a minute later, because you can see this was 796. Now we're looking at 800. So now we're getting execution prices at 800, 801. Look at this, 1,000 shares at the ask. The ask was 801.00. Execution price was 801.00. So that's 1,000 shares. That's an $800,000 buy right there on Tesla. Again here, all these orders coming in at the ask. Look at this one, 801.03 was execution price. The ask was 801.00. So this one actually came in above the ask. That shows aggression to get in the trade. If you start to see orders coming in above the ask, here's another one right here, 800.87, and the ask was 800.86, 177 shares. So when you start to see these orders actually coming in above the ask, that shows aggression to get in the trade. These people want to get in the trade. And here's an example right here, how sometimes the red and the green doesn't actually mean that the green was a buy and the red was a sell. Look at this. Execution price was 800.50, ask was 800.50, bid was 800.05. So this was definitely a buy. It's 100 shares that were bought, but it's red. That just means the stock was ticking down. But look at all of this aggressive buying. 1,000, 400, 200, lots just coming in nonstop. So what happens when it looks like that? So if you see this on times and sales, this aggravated buying, guess what? You're going to know without even looking at the chart that this stock is about to take off without even looking at the chart. So this is at 9:44 a.m., May 8th. What happens next, you ask? Boom, 9:44 a.m., May 8th. So if you're looking at the chart, I'm looking right here. Okay, all right, so I've got some resistance here at 798. I've got some resistance here at 799. Wow, look at that. It just absolutely slashed through it, took that out, and just kept running and running and running. So if you could actually tell just by looking at times and sales in level 2 that a stock is going to take off without even looking at the chart first. So you saw that aggravated buying, millions of dollars started flowing into the buy side on Tesla, and it just took off. Now you have aggravated selling here. So now it's basically the same thing, but opposite. Like I said, it doesn't always correlate that the green is a buy and the red is a sell, but it tends to happen that way. So you can see here, now you see a lot of blood red instead of a lot of green. This is Tesla, May 12th at 3:18 p.m. And now we're looking here, okay, look at all these execution prices. 823.30, okay, at the bid. 823.34, at the bid. 823.38, 400 shares, at the bid. 200 shares, at the bid, at the bid, at the bid, at the bid, at the bid. Look at this, 998, that's, call it 1,000, at the bid, right? Look at this, 1,946 shares at the bid. 823.88 was the execution, 823.88 was the bid. So it's almost 2,000 shares at the bid. That's $1.6 million at the bid, right? Moving on, 1,000 shares, close to the bid. It's not at the bid, but it's closer to the bid, right? 1,000 shares, closer to the bid. 1,000 shares, closer to the bid. So look at that, wow. Just in the matter of seconds, 1, 2, 3,000 shares were sold off on Tesla. It's 3 times 8, what is that? Like $2.4 million sold off within the matter of seconds. Look at this, 1,000 shares at the bid. Not at the bid, but closer to the bid. 400 shares coming in now. Wow, right? So you could just see all of this selling, all this blood red, right? All of these orders coming in at the bid or close to the bid, 100 shares, 100 shares, 400 shares, all coming in right at the bid, and they're actually making this price come in lower and lower and lower. So what happens next? If it looks like this, what happens? Well, this is at Tesla, May 12th, 3:18 p.m. Boom, right? 3:18 p.m. So before it even broke this, let's say I'm just looking at this chart right here. Okay, yeah, okay, I see that support. It definitely bounced off of that. Okay, yeah, this is definitely support, right? It bounced off of that. Very nice. But guess what? If you're just looking at level 2, times and sales, you can see before it even broke that support, there's stupid money outflowing from Tesla, right? So there's millions of dollars outflowing on Tesla, millions of dollars in selling, just coming out of Tesla. And before it even breaks that support on the chart, then that's when you know there is aggravated selling, there's aggressive selling, and that is when the stock flushes. So just within a matter of minutes, we came down all the way from 823. Look at these order prices, right? So this 1,000 shares coming out of Tesla at 823.44, 823.24. And look at this, look at the price scale on the right side there, 823.53. And wow, look at that. Just within a matter of minutes, it dumped $10 a share. What do you think about that? So my key takeaways for you from level 2 and times and sales. A stacked bid is a strong support or buyers. A stacked ask means strong resistance or sellers. A thin bid means not a lot of buyers. It could flow through easily to the downside. And then a thin ask means not a lot of sellers, could rip through easily to the upside. Don't get tricked by huge lot sizes on bid or ask. It could be market maker tricking you. Green and red colors on times and sales do not represent buys and sells. They represent direction the stock is taking. Large buys at or above the ask means strong demand for upside. Large sells at or below the bid means strong demand for downside or selling pressure. I just showed you 2 beautiful examples with Tesla of what exactly both aggravated buying and aggravated selling looks like. So if you see that, keep. The thing about level 2 and times and sales, it's not something that you can master overnight, but keep an eye on it. So if you guys are trading tomorrow, you're day trading, watch the level 2 and times and sales for a stock that has a lot of volume. So if it happens to be that Roku tomorrow takes off, or Beyond tomorrow plunges, take a look at whatever stock that has a lot of volume and kind of just watch that level 2 in times and sales, and just keep watching it, and eventually you'll get a hang of it. But I hope that kind of, made it a little bit easier to understand. And that's all I have for you guys today. So we'll be taking questions.
What's up, guys? You guys have any questions?
Make sure you guys leave a testimonial in the chat. Why is it safe to paper trade? Because it's not real money.
I think that was a joke.
Oh.
Yeah, you want to sell at the bid.
What's the lady name that give you the dark web info? I'm confused.
Yeah, that's Maelstrom.
That's who?
Oh, no, level 2 is free in Thinkorswim.
Oh, Mel Stone. Oh, okay.
Yeah, I use it primarily to find bounce levels.
Any other question, guys?
Level 2 has absolutely nothing to do with watch list.
A lot of examples are through Thinkorswim. Are these available on Tastyworks? I mean, I don't think so. I don't think Tastyworks has level 2 and the times and sales.
I think it's on a web-based version. I don't think you can get the level 2 quotes on Thinkorswim on mobile, can you?
You can get them on the platform.
So like you have to download the app straight on the computer?
Yeah.
Yeah, that's the only way you're going to get them.
Does it have times and sales though? I think it has level 2. Let me check.
What? Tastyworks?
Yeah.
Tastyworks has level 2?